I feel like everyone's just pretending or collectively ignoring what is clearly obvious in front of our very eyes. Global economies are under a lot of pressure, the American economy foremost among them. Everyone thinks the American economy is so strong. I'll show you how it's not. And if they point to unemployment and the stock market, both those things can change in a minute. So we got to talk about all these things. We're going to talk about politics, real estate, cryptocurrencies, stocks, a lot of stuff. We're going to move fast, so keep up with us. We're going to keep on going. And I hope that everybody is enjoying this rate cut rally. They realized that inflation came in lower, so people thought, oh, we can lower interest rates sooner, which you already knew, and now everybody else is coming over onto this side of the raft. A lot of money is moving around because of the rate cut rally. Stock market goes higher. A lot of things get a lot of positive momentum. But the rate cut rally will fade away. I'm going to show you that this economy has already fallen off a cliff. Perhaps even in 2008, 2009, the global financial crisis. And they just doused it with a lot of money. Then we had a lot of stimulus money on top of that. And we've lived off debt. And so here we are with this strong economy. In part one, we're going to talk about some brutal facts. These are all just reality that you can check and verify for yourself if you want to. Then part two, I'm going to give you my opinions of what's to come for precious metals, inflation, stocks, cryptocurrencies, real estate, and much more. And then part three, I'll tell you some action steps you can take and what you should be doing about all of this. There is no should, but what you might want to consider doing about all of this. What happens now is that Jerome Powell lowers interest rates in the next couple of months, pretty soon. And when he does that, that's when we enter the recession. When the recession starts, that's when unemployment goes higher. That's when a lot of businesses will be under strain, more bankruptcies than we're already seeing, more delinquencies, and you're going to start seeing the stock market trading appropriately. I've always said for a while now that I do not trust this market at all. It is managed, it is controlled, it is nothing like the stock market of our grandfathers. And since we're falling into the recession from a very high and very delusional height, that means there's a lot further to fall, meaning that this might not just be a recession, but it could potentially be a depression, perhaps even rivaling the Great Depression. And if you think the stock market is going to keep on going, that means that you believe that these indicators, which have never been wrong, that are calling for big stock market crashes like the Buffett indicator or the Q ratio, calling for significant stock market declines. You're saying that those are incorrect for the first time ever? If you believe that, then maybe this video isn't for you. Who this video is for the people who understand that it's good to look at reality even if it's ugly. And that's what we're going to do in this video.
You help yourself and people just like us when you click the like button.
There are sirens in the Golan. There's been air raid warning sirens in the Golan Heights repeatedly. Hezbollah recently said that they just fired more missiles at Israel in a single day than ever, so things are escalating. Meanwhile, in Yemen, the Houthi rebels are conducting a massive military operation, which they're calling the Devastating Flood Maneuver. Meanwhile, there are fighters coming in from Afghanistan, Iraq, Syria, and they're going to Southern Lebanon to be ready for what will be the Great War of our time. And you guys know all about debt loads. Here's a chart of how much debt the federal government has taken on, and look at the recent jump. This is absolutely preposterous. There's your economic strength. Look how good we're doing. And when you add higher interest rates onto this debt load, here's the interest payments that the American government has to pay simply because we have so much debt and interest rates are so high. That's one of the main drivers of why interest rates will likely fall, because we can't afford to pay the carrying costs on the federal debt at these rates. Here's a chart of municipal debts. Oh, look at that. They're higher. Look at corporate debts. Here's a chart of personal debts. Don't you guys see that this is all just one chart laid out again and again and again? Just more, too much, too extreme. I'm talking about the federal government. There's deficits all over the place. The balance of trade, the operating deficit. We're sending more money to other countries overseas to buy their things. They're buying less from us. We're not producing a lot. And then when we rack up bills to run the government, we're only paying for half of that cost or those expenses with taxpayer revenue. Taxation brings in 50% of the money that we spend. What happens to the other half? That's the deficit. That's the overreach. That's where we need to borrow money from other countries or from American citizens. They can buy bonds, and that money can go to cover off the overspending that we're doing. And just to give you a picture of this economic health, here's a chart of bankruptcies. And as you know, unemployment is strong, but it's starting to rise. It's at 4%, 4.1%. And as this recession rolls in, this unemployment rate will potentially spike pretty quickly. But luckily, in terms of inflation, we've won the battle. We've got inflation down. People aren't as worried about inflation anymore. They're expecting rates to start coming down. We've won the battle, but we have not won the war. Inflation will make a comeback because there's going to be a tremendous amount of monetary creation. This is what governments do. This is the only option they have.
The Peter Leeds newsletter is one of the most popular financial publications of all time.
They're going to default one way or another. This is the most politically expedient path where you just create a bunch of money and you default through inflation. The value of your dollar just keeps on declining. It's at about what, 1% of what it used to be? Luckily, there's a lot of deflationary forces right now. First and foremost among them is artificial intelligence. I call that not just deflationary, but hyper-deflationary. There's jobs being wiped out by AI right now. There's tools that are helping people be more efficient. You can accomplish more with less employees. And so what's happening is that we're more efficient, things are easier, and there's a lot less people working. Here's the jobs that have been wiped out by artificial intelligence or could potentially be. Whose jobs are these? The consumer, the consumer's jobs, our jobs, your job. So talking about consumer, here's their credit card debt levels, the highest it's ever been. The delinquencies are on the rise. We were talking about auto loan delinquencies, repossessions, or mortgage delinquencies. Also at an all-time low are households that are not feeling like they're keeping up with inflation. It's never been worse. And why don't I trust the stock market at all? One of the reasons among many is the market breadth. 10 stocks account for 87% of all stock market gains. These stocks include Apple, Microsoft, Alphabet, Amazon, Nvidia, of course, Meta Platforms, Tesla, Taiwan Semiconductor, SAP, and ASML Holding. Take out those stocks. That's 87% of all the gains of the worldwide stock markets. Just like right before the big stock market crash of 1929. When the breadth gets less and less, when more money going into the market all goes into Nvidia, but not everywhere else, that's a warning sign. That's an unhealthy market. Nvidia is absolutely priced for perfection. You have to be incredibly cautious with these stocks at these levels, in my opinion. A tree can't grow to the sky. Now here's a chart of historical price earnings ratios, and you can see this is overvalued territory, risky territory. When you combine this with the Q ratio, the Buffett indicator, all warning signs are screaming that you're ridiculous to not at least have your eye on potential downside right now. The S&P Retail ETF, which has a ticker symbol XRT, has a ratio of over 4 people selling that ETF short compared to how many people are buying it. 4 to 1. When you put that in with all the other indicators we're looking at, this builds a story of a lack of health in the stock market and this economy. And what people need to realize and remember is that the stock market is not the economy. Just ask the people of Venezuela. They had the best performing stock market in the world. They had hyperinflation. The price of gold went up so much that it's not even worth talking about the levels. You would scrape off a little tiny bit of gold and say, here, give me your house. They say, yes, sir. The economy is in ruins. The quality of life is in ruins in Venezuela. We're going to have the benefit of the stock market going through the roof as you can't find medicine or food on the shelves. And another reason why people believe the economy is doing so well is because the dollar is being trading really strongly. Here's a chart of the Dixie, the US dollar value, in comparison to a bunch of other fiat currencies that are not backed by anything. And of course, it's a matter of time. Very soon we're going to be going to the central bank digital currency. The CBDC is the absolute end of any financial autonomy you will ever have again. They know what you buy, they know when you buy it. They can control what you buy and when you buy it. They can control how fast you spend your money. They can decide or dictate to you what the interest rates are. They can do bail-ins to take some of your money like we saw in Cyprus recently. Meanwhile, the purchasing power of the dollar itself has just melted down to a sliver of what it used to be. And it continues to do this at the same rate, actually at a faster rate because of all the monetary creation. If there's 10 things that are more valuable than if there's 1,000 of them. There are quadrillions of dollars now, something like that. Just a meaningless, ridiculous, unfathomable level. That's how many dollars there are out. And now here's a chart of Japan and China, two of our biggest creditors after American citizens, how they had this much in U.S. treasuries and now they only have this much. That's because they're not buying more and at the same time they're selling treasuries. When they do that, that puts more pressure on treasuries themselves, making bonds be less valuable because there's more bonds out there. And then the interest rates have to increase to make the bonds attractive enough. That's why I always tell you there's two types of interest rate increases. The Federal Reserve can say we're going to lower rates or we're going to increase rates and decide it. But then there's also organic interest rate increases and decreases. When Japan and China get rid of or stop buying a lot of U.S. bonds, the bonds themselves will have their interest rates increase because they're less valuable. And as I've showed you, the time in the sun for us with the reserve currency is limited. You don't just go forever. A tree can't grow to the sky. We're closer to the end of the time when the American dollar is the reserve currency of the world. Those days are going to change soon. Probably going to be replaced by the BRICS new gold-backed currency. And speaking of the BRICS, there's a lot of countries now. I'll put a chart on the screen to show you original members, the newest members, plus prospective members. They're taking over the world. They already have over 40% of the global population. And they get to decide what currency they use to buy and sell things. They're not choosing the US dollar. And so there's a lot of countries all over the world that have a lot of US dollars. They use this to pay back American debts, for example. And they don't need as many US dollars anymore, especially because the petrodollar is no longer a thing, so to speak. Any country can buy and sell oil in yuan, in rubles, whatever they want to do. That's different than a decade ago. And as we lose petrodollar status, there's less dollars being used for oil purchases and sales. That just puts more strain and more fade on the fact that we have the reserve currency. Having the petrodollar really added a lot of power to our reserve currency. They are both going away, the petrodollar and the reserve currency. I always say that they're not siblings, but they're cousins. One feeds into the other. And we're going to show you proof that real estate is in a bubble right now. People are starting to agree with what I've been saying for quite a long time, and I know I'm always early, and I know being early is the same as being wrong, but real estate is absolutely slated to be declining in America. I called it in Canada, and the prices came down a lot, and you're going to see the same thing happen in the States, although we're not as overvalued as the Canadian market was, but the American market is still overvalued and unaffordable. It is out of reach for the people that need to be buying the real estate. Meanwhile, there's a lot more supply coming on the market from new builds. As I told you, it would organically repair itself, the inventory levels. Plus, with interest rates starting to come down, people will start moving around more, putting their house on the market, getting a new deal for their mortgage. And as I promised, I want to talk about politics. I make a point of trying to avoid politics at all costs on this channel, but this is something that needs to be said. You know that it was hidden from you that there was a clearly obvious mental decline among President Joe Biden that was not widely displayed. Things were hidden from you. And the reason I'm talking about this is because I want to say too, and you'll understand that they're also hiding from you the fact that the economy is very weak. It's all the same thing. They're just trying to control the optics. They need you to believe the economy is strong, especially for the next 5 months. Let that sink in. And just before we get into some action steps you could take, as promised, I want to give you some of my opinions about things that are going to happen in the next few years or sooner. I believe you're going to be seeing double-digit inflation. I believe you're going to be seeing double-digit unemployment. There will also be double-digit declines in real estate, cryptocurrencies, stocks. And when I say double-digit, I don't just mean 10%. At least 20%, probably a lot more. I do also expect to see triple-digit silver. And you can extrapolate for that what I think is going to happen with gold, platinum, palladium. There's going to be a further massive spike in federal debt loads as they create more money and just dump it onto all of us. Interest rates will also be declining as they're creating all this new money. Very stimulative, but that is, unfortunately, as we'll crest into the recession that I've been expecting for quite some time, and they keep putting it off by creating money. They're at the end of the road. They can't put it off anymore by creating money because nobody's buying anything. You're going to see a decline in consumer confidence, even further than it already has declined. You're going to see a decrease in your quality of life, overall quality of life. And if this is too heavy to have to hear, it's all bad news, then I'm sorry. I'm just telling you reality. Only some people have what it takes to actually look at reality and see what's really going on, even if it's really painful to look at or scary. You're also going to see spikes in suicide rates, domestic abuse, petty crimes like thefts. So in general, something that would make sense for you to prepare for. Here are some action steps you can take that maybe will help you get through this difficult time to come a lot better. Hopefully you listened to me a few months ago or even a few years ago and you're sitting pretty with a pretty good gain in your gold mining stocks, silver mining companies. So you're going to keep on benefiting as more and more money comes over to the side of the raft. What needs to happen is that we need to stop collectively ignoring this elephant in the room. We need to look right at this reality and realize that it's a problem. The first step of solving a problem is identifying it exists. So please help me spread this word because no one is understanding what is about to happen. You can do that by sharing this video. And maybe you think this is a backdoor way of getting you to share the video so I get more viewership. If that's what you believe, then don't watch this video. This video is not for you. This video is for people that understand the reality, the downside that's to come, and they want to help the people that they care about to be ready for it at least, to not be surprised by it, not be blindsided by it, as everybody's going to be. Things are about to fall off a cliff, and nobody seems to be looking at the data, the information that says that this is going to happen. So I would suggest that you have a lot of exposure to oil right now, especially with what's going on with the war. Also gold, of course. I'm a huge gold believer. Silver as well. You may want to be careful, cash out from the high-flying shares like Nvidia or the Magnificent Seven. A lot of these stocks are overvalued pretty significantly. And this is not personalized trading advice. You do what you want to do. I don't know anything. I also would suggest that you pay super close attention to everything I talk about with you guys. I'm telling you specific things for a reason. I need you guys to understand what is to come, to prepare for what's to come. And part of dealing with looking at reality is that I believe you should absolutely expect that this war is going to break out significantly further. I'm talking about involving Iran, which therefore would involve Syria, which involves Russia, perhaps even Turkey. They have a huge standing army and they're not really friendly to Israel. This will be the war of our time. It's going to be horrible, and I would expect that at least put a little sliver in your mind that this may actually break out exactly as it's about to break out. The decisions you make will be different. The types of things you invest in will be different. This is the single most significant thing that's happening right now, is whatever happens with this war in the Middle East and even the war in Ukraine, but mostly the war in the Middle East in terms of bringing in a lot of other countries. Fighters from Afghanistan, Iraq, and Syria are all massing in Southern Lebanon right now, getting ready for the war of our time. Please do not ignore these topics. They're really hard to look at. It's hard to put your head around, and you say, what am I going to do about it if a war breaks out? Of course, it sucks, but you would make different decisions if it's going to happen anyway. There's decisions you can make that will actually make it better for you. Land on your feet a little bit more than you would have. You help people you care about. But the fact that you're looking at this reality with me, it puts you in a very slim minority. The vast majority of people are going to get blindsided, and when they do, there will be massive flows of money from point A to point B. You want to be sitting already invested in point B. We're looking at the economic reality. That is what the truth is, and the truth always comes out. People will eventually realize this, and you want to be set up before they realize it. That's your opportunity. The truth always comes out. The Buddhists have a great saying that says, 3 things cannot be hidden: the sun, the moon, and the truth. For a couple bucks a month, you're supporting the channel, keeping us sponsorship free, advertisement free, independent, and we produce more and more content the more support that we receive.